Hello, hello students. This is Taranam Jahan from the Department of Commerce. Today we are going to discuss the sixth problem from our subject Advanced Corporate Accounting and the unit Electricity Companies. So here is the question, sixth question, and it says from the following balances as on 31st of December 2000 appearing in the ledger of the Electric Light and Power Company Limited, you are required to prepare revenue account, net revenue account, capital account, and general balance sheet. So with the help of the given balance sheet, with the given balances, we are supposed to prepare net revenue, capital, and general balance sheet. Okay. So let's see what are the details are given here. The details are equity share 54,900, debentures 20,000, land on 31st of December 1999. Look at the first line of the question. From the following balances as on 31st of December 2000. That means current year is 2000 and the lands given here are for 31st of December 1999. That means these belongs to the previous year 15,000. This will help us in our capital account. Then comes the land purchased during the year. That means for the year 2000 is 500. Machinery for the previous year, that is 31st of December 1999 is 60,000. Machinery purchased during the year is 2000. During the year 2000 is 500. Means including cost of laying 31st of December 1999 is 20,000 and spent on means during the year that is 5,100. Sundry creditors are given 100. Depreciation fund is 25,000. Sundry debtors for current supplier is 4,000. Then other debtors are 50. Then comes on the next balances. Those are stores on hand 700, cash 300, cost of generating electricity is 3,000, cost of distributing electricity is 600, rent, rates and taxes are 400, management expenses are 1,200, depreciation is 2,000, sale of current is 13,200. That means what we have generated that we are selling, that is for our revenue account. Rent of meters 300, interest on debentures 1,000, dividends 2,000, balance of net revenue account for the previous year again is 31st of December 1999 is 2,850 rupees. So this is our question. Hope nobody's having any I hope you people don't have any doubt in it. Now we will be resuming with the solution. Here is the solution. In question, we are asked to prepare revenue account, net revenue account, capital account, and balance sheet. Okay. First, we will be preparing the revenue account. Here, in our revenue account, here it is. Revenue account of Electric Power Supply Company for the year ended 31st of December 2000. Here, particulars. debit side and credit side are given. We have already seen what are the items that appears in our revenue account under different headings. So here comes to cost of electricity, generating electricity is 3000. Then comes the cost of distribution, that is 600. Then rents, rates and taxes 400. Management expenses 1200. Depreciation 2000. All these are expenses. All these are expenses for we can say that it is all these are expenses for the generation and distribution of the electricity. Then comes the income received from the generation of electricity. The first item to be appeared on the credit side will be the sale of electricity. The sale of electricity has earned 13,200 rupees. Then comes the rent of meters 300. So the total of the income is 13,500. When comes on the debit side, the total for the items would be, we will be saying that 3,000 for electricity generation, then 600 for distribution, then rent and taxes 400, then 1,200 for management expenses, and 2,000 is the depreciation that should be deducted from the total comes to 7,200. That should be deducted from the 13,500, and you will be getting here on the debit side a balancing figure as 6,300. This is the balancing figure you're getting here, 6,300 as the balance to be transferred to net revenue account. Then comes the revenue account. We have already seen that net revenue account is like a P&L adjustment account. After we are getting after the getting the profit or loss, what are the adjustment items are there, will be adjusting in the P&L adjustment or appropriation account. Here net revenue account works for the same. Here we got the balance in the revenue account on the debit side that we are transferring to the net revenue account. Once the balance comes on debit side, that should be transferred to the credit side. That means this is a profit or revenue from the revenue account. Here the balance transferred by balance brought down 2,000. Sorry, this is the amount related to the previous year. What is the previous year mentioned here? That is 1999. Okay, this is 1999. Then after that, by balance brought down, this is the previous year balance 2,850. Then this is the balance from the revenue account which we have just calculated, 6,300. So the total revenue of previous year plus current year will be 9,150. Here comes only debentures and dividends, interest on debentures, interest on shares and interim dividends. Then here is the total to interest on debentures 1,000, to interim dividends 2,000. Total comes to 3,000. 9,150 minus 3,000. Balancing figure to be transferred to the capital account is 6,150. This is your balancing figure. Balancing figure. Okay. Then this balancing figure 6,150 will be carried forward. Will be carried forward to the next step, receipts and payment on capital account. Here are the receipts and payment on capital account. Capital amount is always used for the purchase of fixed assets. So here Receipts and payments on capital account should be in the receipts and payment on capital account only. Fixed assets should be taken on the debit side, and all the long-term liabilities should be written on the credit side. Here we are taking the fixed assets given in the question, that is to land 15,000 for the previous year and 500 for the current year. Total comes to 15,500. Then to machinery, 60,000 for the previous year and 500 for the current year. Total comes to 60,500. Then to means 20,000 for the previous year and 5,100 for the current year. Total comes to 25,100. So these are the totals for previous year, current during the year, and total of right now, total balance. Okay. Then come on the credit side, we will be writing the revenue receipts. It is an account of receipt and payments account. So here expenditure, how it is an expenditure, we are spending the capital to purchase these assets. That's why these assets are coming under the expenditure account. And these are the equity shares and debentures are the sources of funds from where we are receiving the money, receiving the capital. That's why they are coming on receipt side. Okay, so equity shares are 54,900. No shares were issued during the years 54,900. Same will be the amount at the end of the current year, that is 31st of December 2000. So here the next is debentures. Debentures are 20,000 for the previous year, and we have not taken any debentures or issued any debentures during the year. So the total debentures comes to 20,000 only. So this total is 74,900. Okay, this total is 74,900. Whereas when we'll calculate the total on the debit or expenditure side, we'll get 15,500, including or addition to that is 60,500, addition to that is 25,100, and total comes to 1,01,000. Here is the total 1,01,000. This we are writing here. This is not needed to be written. Here we will be writing 1,01,100. So we are writing the total. Here we are getting the less amount that we will be writing here, because we need to write the balancing figure. Here we are writing 74,900, 74,900. Then this 26,200, this 26,200 is the balancing figure. You will be writing the total here. You will be writing the total here, and you will be writing the balancing figure here. That should be carried forward to the general balance sheet of the company. Okay. Here comes the general balance sheet. If the total, you should be writing the total, whatever the side, it might be expenditure side or it might be receipt side. You're supposed to write the total amount. After that, wherever you're getting less, that you should be writing the total. After that, you will be writing the balancing figure. That is by balance carried down to the general balance sheet. Okay, here we got a balancing figure on the receipt side, that is 26,200. Then comes to the general balance sheet. Here is the Electric Power Supply Company Limited's general balance sheet on 31st of December 2000. Here in the general balance sheet, as we have already discussed, we will be writing current assets and current liabilities. So on the liability side, we will be writing all the liabilities. So total capital, total capital total capital on the capital account is 74,900 that we are writing here. Then we are writing how much we spent. We spent 1,01,100 from the capital account. Here the current assets given in the question are sundry creditors, that is 100. Then depreciation fund net revenue account is 6150. Here net revenue account, what we have received, what we have got here is 6150 that we are carrying forward. This will be written in our general balance sheet, 6150. So total expenditure what we have made is, after purchasing the sales, 1,1100. 1,1100. Then in the current assets are debtors for supply of electricity is 4,000. Other debtors are 50. Yeah. Other debtors are 50. Stock in trade is 700 and cash in hand is 300. So these are the current assets and current liabilities given in the question. After totaling it up, we will be tallied with the general balance sheet, that is 1,06,150 on the liabilities and 1,06,150 on the asset side. Hope you don't have any doubt in this question. If you have any doubt, you can raise your doubts in the Google Classroom or in a WhatsApp group. Take care, girls. Stay home, stay safe. We'll be meeting for the next question.